Okay, my name is Paul Locke. I'm the Managing Director of Pan Asia Metals. Pan Asia Metals is a Southeast Asian focused battery and critical metals explorer. Our key project is the Riong Kiet Lithium project, which is located about 30 minutes out of Phuket in Thailand. We've just delivered our inaugural mineral resource estimate, 10.4 million tonnes at 0.44% Li2O. For about a contained LCE of 113,000 tonnes. We're about halfway through the drill program, so we expect an upgrade to the MRE later this year.
Okay, Paul, thanks for coming on the show. First time we've met or spoken, so kind of always love a news story. Congrats on the Maiden resource. I think that's something we want to kind of dive into. I think you said that you were hoping for something like this. So you're obviously pleased with what you came out with, are you?
Yeah, very pleased. So we're targeting an initial resource which is sufficient to produce 10,000 tonnes of LCE. We're not sure whether it'll be carbonate or hydroxide. So LCE for 10 years. We've got 113,000 tonnes contained. The drilling pattern's pretty tight, so I expect the conversion to a reserve to be fairly high. We're only halfway through the drill pattern, so the program, so I expect that we will increase that substantially over the coming months.
Okay, so let's dig into that, because I'm sort of intrigued when the technical skills needed to kind of move through to the kind of hydroxides. Is meaningful. So let's start with that. Let's start with you and the and the team, so I can understand sort of backgrounds relevant to what you're trying to do here. So what have you done in the past that's relevant?
Oh, I'm extremely relevant. I grew up in Perth, and I used to work on exploration drilling rigs. So out of school, I was a driller, but then I went and studied, and I became a banker.
I'm so sorry.
So I used to trade commodities with Rothschild, and then I was a project financier with one of Australia's largest project banks, called Commonwealth Bank. And I was involved in a lot of project financings, and then went out on my own and basically over time built PAM. So PAM itself, there's two executive directors, David Hobby and myself. So I'm a banker, project financier advisor. David's a career economic geologist, and the two of us work quite well together in identifying projects. So we've been working together for nearly 10 years. And then our team on the ground is, because we're in Thailand, they're all Thai. So other than David and myself, we've got a local team, which has really paid off through COVID. We were drilling the entire way through the COVID pandemic.
Okay, I always love it when people say an economic geologist. I assume there's probably some on-economics one somewhere.
I'm pretty sure they're right. Yeah.
more common than you think. Okay, so there's the team. Talk to me about Thailand, okay? Because I've actually holidayed down in Rayavadi, near where your projects, or close-ish to where your projects are. It seems very green. The ecology is important to them. Environmental important. Doing business down there, what's it like?
Actually, in Southeast Asia, I would regard Thailand as one of the easiest countries from a licensing perspective. We've worked in just about every country in Southeast Asia or in ASEAN. The Thais are very focused on maintaining a green strip, so on ecology and forestry. And when you initially apply for an exploration license, it takes some time, and they carve out all of these forest reserve areas, etc., before you get your license. So when people look at our presentation, they'll see the application areas, and some of the borders will look like a river, or they're just all over the joint. And that's because they're cutting out areas which are in land reform, so being converted to freehold. They cut out forestry, etc. So when we get our license, on day one, we can drill holes, etc. We don't have to get permits or anything like that. So it takes time, but then we can hit the ground running pretty hard. In the end, if you're working in Australia, it's about the same time to get a drill rig on the ground. It's just that we don't have a license for some of that.
Okay, and so I've not done business in Thailand. I've done work in Indonesia, which was extremely hard and laborious, and quite frankly, too hard for us. And we had to move. We had to leave. You're saying this is one of the easiest countries in the region. So talk to me about the number of permits that you do need to get in place to be able to start a business up, and how much money was that, and how much time are we actually talking about?
Well, to get an exploration permit is reasonably cheap. So our permits are limited to 16 square kilometres, but we can have as many as we want. So the Rio Nket project is it is 3 permits for a total of around just over 40 square kilometres. Our Kaolin tungsten project is, I think it's 2 to 3. Our Katatong project, which is under application, is actually 5 permits, but they're not all joining. So the cost of the permit is quite low. I can't give you a dollar number right now, but it's not material. But in Thailand, you have mandatory expenditure requirements. And what they're trying to do is stop people sitting on licenses to bring in, to earn money. So in Australia, we've got a big problem here. We've got people who've been sitting on licenses for 10, 15 years and nothing really happens. In Thailand, we have to spend money. It escalates. Licenses are 5 years long. But if you're serious about exploration, the cost of producing a mineral resource will be well over what your mandatory expenditure is. So they're not too harsh, but you've got to be serious about what you're doing. And what it means is that as soon as you know a property's no good, there's no use holding on to it and waving a flag. You want to get rid of it.
Right. Okay. So look, you're obviously building this company into a thematic. The EV thematic, strong wherever you go, Asia, Europe, North America. Have you worked in this space before? Have you worked in lithium before? Because it's a very technical metal, right? So that's what I'm sort of gearing up to. You got to be able to work out how do you insert yourself into one of those ecosystems. So
Yes. Look, I haven't, but I've worked in lithium as long as most of the people have worked in lithium. So if we look at it that way, back in 2016 when the boom started, that's when we had less than 4 companies on the ASX at the end of 2015. Including Orocobre and Galaxy. By late 2016, we had 70. And then there was a bit of a washout and most of those companies disappeared and had nothing to show for it. And then we're on our second wave now. Our application actually was initially lodged in 2016. And we've moved along with the market and the knowledge development in that time. But I agree with you 100% that lithium is a technical metal, and you need some skill sets. So once you get to a resource, where do we go and how do we do it? And we've actually engaged a guy called Grant Harman. He's from Perth. He's a chemist. He was involved with Talison's. He's back in the early day. He's been involved in about 20 lithium processing projects, including the POSCO project at JB with PLS. And he's been involved in several different chemistries. So we've got lepidolite. He's been involved with lepidolites and waldite, spodumene, brines. So at the end of the day, he really does have a good idea of where we can go and what we can do with the mineralogy that we have.
Right. Okay. So you're also kind of a small company, right? So where are we with money at the moment? How much have you got?
We IPO'd in late 2020, raising just over $4 million, October 2020. In August 2021, we raised $8 million. And at the end of March this year, we had $6 million cash. Our burn rate is about $1 million per quarter. Right.
So what's the? I'm sort of intrigued. Okay, right. So we're in the EV thematic. We've got lithium. You're in Thailand. You're saying it's a good jurisdiction in which to operate. You've got a big local team as well, and you run out of. So where are you based? Sorry.
So PAM is a Singapore-based company.
Got it. Okay.
But our head office is in Bangkok.
Okay. And you're in Australia, presumably.
Yeah. I live in Sydney, but I'm up there half my time.
Okay.
Yeah.
Okay, so $6 million. How do you? Because I'm always fascinated by the small companies. Maybe you could argue cash constrained or need to be a little bit smarter with how they allocate their capital and on what, because the lithium prices going on a tear at the moment. People are looking at lithium, how you kind of move this thing forward. So Maiden resource today, that's a good statement of intent. Have you had much of a reaction from the market to that?
So with regards to cash, and it's quite tricky. You want some deliverables. You want to build in your value before your next raise. So our last raise was at 40 cents. Our first raise, IPO, was at 20 cents. Given where we are, and if I look at our peer group, I think we're undervalued, and I expect that with what we deliver in the next 6 months, we should see our valuation materially higher. So we would be angling to position the company to be for our next raise to be at a higher level, of course. We look at our peer group pretty closely. So we don't really want to, I don't really want to see our company pumped and dumped and have a whole heap of disgruntled shareholders on board. But I want to see the value of the company increase as we add value to our resource.
Okay, so as a finance guy, you must be looking at this market and going, whatever we say, whatever we put out, you're going to get a shrug of the shoulders because everyone's risk off, everyone's cash in hand. It seems. Were you tempted to kind of delay the Maiden resource?
Look, when we delivered the Maiden resource last week, the market didn't react. And if we look at the market generally over we had the tech issue, Ukraine, interest rates now, and a lot of the market's been sold off. Actually, I think the average in the peer group I follow, which is about 80 companies, I think the average is around, it's over 50% sell-off since their peak. We're off around, depending on the day, between 10 and 20%, and we're holding up pretty well. I think that says a lot about us. We've been fairly conservative with our valuation and so on. And it also means that we weren't way overvalued. Some of these companies were way overvalued. So
yeah, it was an interesting viewing for sure. People getting a little bit excited. I don't mind a shakeout. I don't mind these sort of market shakeouts. I think it sorts the men from the boys, and hopefully people focus on fundamentals. So let's look at what you've got. So Maiden resource, fantastic. More drilling to come, and there's going to be an update when? Did you think?
Look, I expect an update November or December latest. Okay. So with our resource was based on holes 1 to 46 at Rion Kiet. We're on holes 72 and 73 and 74 at the moment. We have 2 rigs running, and we've got another 20 holes planned. Half of those holes are infill, the other half are extensional. So we're still open along strike to the north and south and down dip. And then we'll be moving across to another prospect, Bangi Tum. We'll be putting a mineral resource or exploration target out on that just to give some guidance about what we think about it. But I wouldn't be surprised to see our tonnes nearly double, if not double.
Okay, is that because the ore body is relatively homogeneous or consistent? You're able to kind of predict out?
It's relatively, but it's a dike swarm. So so when we delivered our mineral resource, it was 0.44%, but we've got many drill intersections which are in the high 6s and 7s and even 1%. And so the mineral resource is based on a block model, captures a lot of the rubbish, which would obviously be sorted out when we're mining. So the head grade will be naturally a bit higher than the resource grade. Right,
and okay, and give me some sense of the time frame, because you use words like accelerated in your PowerPoint. You're kind of keen to move this thing through at some level of pace. So can you sort of lay out what your vision of how this works?
Well, we brought on a second drill rig probably 6 weeks ago. Our drilling rates in Thailand are quite cheap. Our actual overall costs in Thailand are quite cheap. It costs us about a third about a third what it would cost to operate in Australia or Canada. So we get a lot of bang for our buck. We want to get our drilling program finished in the next 3 or so months. We're doing some met test work now. We'll start some ore test work, and I expect that we'll be able to deliver a scoping study in December. The work we're doing is feasibility level, so I expect we can move straight through to a feasibility, and our objective is to deliver a feasibility and be positioning to lodge for a mining license application at the end of 2023.
Okay, that's accelerated indeed. Okay, that's pretty punchy. Talk to me about the met work. So that is all that local.
We've got met work happening with a group called Bigram. It's a Chinese group in Beijing. Bigram's done a lot of work with lepidolite, a lot of Chinese met test work. Given China are the biggest processors of lithium, to us it made a lot of sense to use the people who have done a lot of the work. So that's underway now. Interestingly, at Brion Kiet, our oxide zone, which makes up around 30% of our resource, the recoveries we're getting from that are quite good. I can't say numbers at the moment, but they're good. So that means the oxide zone is has the potential to be economic. I've got to use the word potential, but we think it'll be economic. And so that's going quite well.
Okay, so that's at 30%. Interesting. Okay, and so obviously initially, I know you've got someone on the exploration side who. So the technical chap you referred to earlier,
Grant Harman.
Grant is focused on what precisely?
Grant Harman is focused on lithium production, so chemical processing. We've got another person, on the beneficiation work, but that's a lot simpler.
Okay, so, but initially, I mean, obviously. I guess it depends what the market's doing, depends what reaction you get from the market, et cetera, to be able to raise money efficiently, as to where you start with, I guess with the oxides, it gives you some option in the sense that you might just kind of focus on a concentrate first. Is that the idea? Or
no.
You think you can move further downstream?
Our objective is to produce chemicals.
Right. Which sounds good, right? Because it gives potential re-rates and it's all downstream. And but what's the reality of going from where you are today to that point?
I think it's easily doable. So lepidolite is being processed in China. They're using acid leach and sulfate roast, so two different processes. They're producing battery-grade chemical. The processes aren't overly complex. There are slight variations on what's happening in spodumene. So I really don't see any problems achieving that. One of the advantages we do have in Thailand is it's a low-cost environment, or Southeast Asia is. So Thailand and Malaysia are both complex industrial economies. Thailand speaks for about 30% of Japan's outbound FDI. I think there's 18 auto producers in Thailand. So it's the biggest auto manufacturing market in Southeast Asia and the fourth largest in Asia. They've got quite a sophisticated EV policy framework. They want to see 30% of vehicles produced in Thailand to be EV by 2030, so 30 by 30. There's a lot of incentives for battery production there, electric vehicle production, and we expect some of those incentives will flow down to chemical manufacture. And what it means too, outside of the cost environment, so the cost environment itself means that actually building a mine, building a processing facility, we expect to achieve that at a lower cost than a lot of our peers would. So if we look at Kwinana and what it's cost Tianqi to build that and what the actual operating costs are, in Australia, it's a high-cost environment, whereas in Southeast Asia, it's not. So I think it's very doable. We also have an ecosystem there developing in battery production. There's a few Thai-listed companies who are interested. There are some Japanese companies which are also interested. So I expect that we'll be able to look at some joint venture opportunities as we progress to a scoping study.
Okay, I'm listening to you, comparing to all the other lithium CEOs, juniors that I've spoken to, who, are less optimistic than you in terms of, the way they kind of run through this process. You seem to think, and the language you're using is oh, don't worry, it's fine, it's easy. We feel that this will be an easier process than you perhaps can imagine, Matt. I'm trying to understand why that is, because you're saying we're going to be a chemicals company. From being a miner to a chemicals company is a bit of a leap. Whether it's whether it's a carbonate or even further down hydroxide. A lot of skills needed. You kind of referenced a few things there. One, China a few times. So they are the preeminent technical gurus in this space, and Japanese or even local battery manufacturers. So, I'm coming back to strategy. How do you piece this together? Is it a case that you bring in the relevant experts and you are in fact the miner in all of this, or do you feel that you can genuinely position yourself, your company, downstream?
Most definitely, because it all comes down to people. If I was talking to you as a chemical company and I had the people to build a chemical facility and I was looking to secure offtake from my company, you would look at that and go, okay, they've got the professional people, they have the ability to build this. There's no real difference than our company then bringing in that expertise, whether it's through joint venture or consultants, etc. We bring in that expertise to achieve the same objective. So I don't see it as a big problem. I think what a company like us needs to do, and a person like me as a manager needs to realise, is that I don't have the expertise. I can't tell you that I do and I will be running it. What I need to do is find the right people, and I think we're starting to do that already, to bring in who can with confidence tell us how we can do it and which direction we need to go and where we need to avoid to fall foul of our plans.
Right. And how does that work in terms of the conversation, the narrative in Thailand then? Because you're a mining operation in Thailand, you're an Aussie company, and you're bringing in experts from around the world, whether it be Japan, China, or wherever. Presumably you'll be shipping this offshore. So how do you kind of maintain that conversation of this is good for Thailand and all the other things that you need to talk about, net zero and et cetera. So how do they view you at that point? Well,
our plan is to produce a chemical in Thailand, and given that it's a low volume, it would be 10,000 tonnes per annum. That would be going into the Thai ecosystem. So in Thailand, south of Bangkok, is the Eastern Economic Corridor, which is a very large area, a lot of auto manufacturing there and so on. So we have two paths. We'd be producing either a concentrate near our site and shipping it up to the EEC, or we'd be producing a chemical at our site and shipping that up to the EEC. That's what we're exploring in our scoping study at the moment. When we're talking to the Thai authorities and we talk about delivering a chemical into the Thai EV ecosystem, we get a very good reception. And in fact, part of the reason we want to do that is from a political standpoint, if we're contributing to the Thai industrial system, we get a much better reception than if we want to export a concentrate.
What's that look like financially? Are there any incentives for you by the Thai government?
I actually can't say whether there are, but we expect that if we're producing a chemical, there will be some incentives which flow down to us. So there's for the EV and battery producers, there are tax breaks, income tax breaks. There are import tax exemptions on equipment and so on. So I expect that some of that will flow to us.
Okay, I guess it's early days as well. Just put out a main resource, right? So you've got a ways to go, and those conversations will come.
Yeah.
Come back to that. Did you say the burn is about $1 million a month at the moment?
$1 million a quarter.
$1 million bucks a quarter. Okay, cool. Can you break that down for me? Because the you said it's going to be cheap to operate there. So where's the money being allocated to? What's it on?
Right now, probably 60% of our expenditure is into our Thai operations. So that includes drilling, contractors, our people, assays, etc. Okay. And then the rest is into corporate.
Okay. So that's about eight. Okay, so that gives you about 18 months runway. So I guess right. And so you're fine. You're not going to raise money this year, are you?
Not in this market.
Not in this market. No.
No.
Well, so you'd be surprised. Some people do because they'll argue the case that it's what I do with that money, and getting ahead of your 80 peers that you look at. Yeah. Maybe that makes sense, but not for you.
There are many ways to justify these things, but it's all about dilution. And given that management has a large shareholding in the company, we're very focused on getting a lot of bang for our buck. So every dollar we spend, if it's wasted, it's dilutionary. If we raise money at the wrong price, it's dilutionary. So we're looking at the current environment. I'm hoping that we start to see a bit of a bounce back in the next, 3 to 6 months. Otherwise, things will be looking quite dim when it comes to raising capital.
And you never want to negotiate with a weekend. So, just talking about the share register, obviously management are setting up, but you guys have got the cheap stuff at the beginning. So, but who's actually put the hard dollars in? Pan
Asia started as a private company. It was a private company through until we listed in 2020. For most of that company's life, I funded it personally. And
how many dollars is that? So, how many dollars are you into this for?
It's only it's a bit over $1 million.
Okay.
But what I've found is that the point where the most dilution happens is when you've got very little to show. You've got a lot of moose pasture. That's where you get completely killed. So we did a lot of work on identifying our assets. Then we and that included a lot of soil geochemistry, etc. And when we were at a point where we had something which looked pretty real, then we started looking for third-party funding. We brought in some mainly private individuals, pre-IPO. That allowed us to do some drilling. So when we took it to IPO, we actually had assets which had drill holes put through them, and they were de-risked substantially. And that allowed us to IPO at a reasonable market capitalisation.
Okay. And so which of the other directors have put money in it? I assume David has.
Myself, I'm the largest shareholder. David Doherty, he's the second largest shareholder, one of our directors. And in fact, the Kaolin asset came in through him through a farm-in many years ago. So that's how he's there. Then David Hobby and Tanasak Chaniapun are smaller shareholders. And have put in a lot of time. So time is worth money too.
It is. Well, there's another interesting debate which we could argue either way.
Yes.
Okay, so can you just give me a sense of, right, so if you're not going to raise money this year, do you feel that you're going to be able to move at the pace you want, or again, is that kind of market dependent? Because again, coming back to your comments about, accelerated timeframes, et cetera.
One thing we do have the luxury of is we can turn up or down our drilling, our biggest expense, pretty easily. And so our drilling right now, we're running 2 rigs and 3 shifts. We can turn that up to 4 if we need to. At this point, I'm a little bit reluctant. I want to see the market sort of recover a bit. And as it recovers, we can turn it right up if we want. So there's a lot of flexibility there, but I'm a big believer in that we keep working. I don't like the idea of, things start looking a bit grim, so we all stop all expenditure and just sit there and wait. That's not fair to shareholders. And I think in this market too, investors are willing to reward companies who are producing the results.
And talk to me a little bit about, just for the people who perhaps don't understand it as well, Aussie tax loss season, we've just kind of come through that. I mean, how do markets usually behave before and after that point?
Sorry, what's that?
The Australian tax loss season, which is sort of, as I understand it, sort of June period. In the North American markets, you sort of see very definitive patterns at the end of theirs as a calendar year. What happens in Australia? Is it predictable?
Did you say tax losses?
Yeah.
Yeah. Well, because we're a Singapore company, we're not subject to Australian tax law.
Oh, but so where are most of your shareholders from then?
Australia.
Right, that's what I mean.
So for them as shareholders, right. The tax year end here is 30 June. So we did see a few investors selling off, and I expect buying back in after 30 June. But it wasn't big. I didn't notice a lot of that. So I don't think it really affected us. It seems with some companies that it's quite popular, but I haven't seen too much of it.
And is that because, you're quite tightly held in the sense that, your top 6 shareholders are about 50% of the register, right? So, what's the retail component?
What's the, sorry?
How big is the retail component as a percentage of the
well, we've got just under 2,200 shareholders. Okay. And most of those would be retail shareholders. Mm-hmm. And I did notice that the number of shareholders dropped probably by about 100 leading up to 30 June.
So not big at all. Okay. And as a percentage, in terms of liquidity, you didn't notice anything, right?
No.
Okay. Interesting.
Yeah. We haven't got a lot of liquidity at the moment either. We've been quite illiquid.
So what do you want to do about that? What are you going to do?
Well, I'm talking to you.
Well, it's a good start, but you also need to make some available, right? So how do you tackle that problem?
Well, it's hard to tackle if your register's tight and not selling. That's a positive. I guess to be honest, I can't answer your question right now.
Yeah. Okay. Well, Paul, that's a really nice run through. I like the confidence, and we will wait for the update to the resource, which is sort of imminent, and the economic study as well. You don't think you're kind of rushing too quickly into the economic study? You feel you've kind of got the size to actually come to the market with something meaningful there, do you?
I think so. When I look at some of our peers, so we're looking to produce a study which gives us 10,000 tonnes of LCE for at least 10 years. So it's bankable, providing it's economic. If I look at some of our peers, it's not as large as some, but it's double some. So I think it's okay. But given what's happening in our drilling, I think we can up that anyway. So, I'd prefer to see something around 15,000 tonnes. One of the advantages we've got, so if you look at a lot of the brine projects, they're all 20 to 25 at least. And that's got partly to do with the economics. You need the scale to make it economic. Whereas if we look at some of our peer feasibility studies, it's not absolutely necessary to be producing plus 20,000 tonnes to get those economies of scale.
Right, and just like one last one. So in terms of the byproducts, etc. Do you think that you feel at this point you know enough, say they may be able to add something meaningful to the bottom line? Well,
in the current price environment, I think realistically the byproducts would be quite a small percentage of your revenue line.
Okay.
If this was the market in 3 or 4 years, which I'm not sure it will be. But the byproducts, it depends which process path we go to. So byproducts also introduce some other problems. If your byproducts aren't saleable, they become toxic waste. So you've got to be quite careful about your market there. So when we look at producing a concentrate, we'll have tin and tantalum credits, and similar to, say, Piedmont, we'll have quartz and feldspar, which we can sell into our local markets. So it's one of the advantages of being where we are. And then in the chemical processing stage, there is the potential to produce potassium and a rubidium and cesium. And this is something we're exploring now. Is it an advantage to produce those credits, or are there disadvantages? And sometimes the credits aren't all advantages, and that's what we're trying to explore at the moment.
Okay, great. Well, look, Paul, I appreciate your time today. We will stay in touch, and hopefully we'll see you soon.
Thanks, Matt. I'll just leave you with a couple of thoughts before we sign off. First, I'd like to reiterate 10.4 million tonnes at 0.44% Li2O. It may seem low as in a grade, but for lepidolite, it's quite a high grade. And we're seeing in China that lepidolite is actually being processed quite cheaply. Thailand, very low cost environment, industrial centre, advanced industrial economy, a lot of opportunity for the EV sector, a lot of policy work around the EV environment and LIB manufacturer. And I think we can slot into that beautifully. And then we just saw Tianqi Corp's prospectus released, had the cost curve on it. And for the first time, we've seen lepidolite production well below the majority of spodumene costs. And I think that's quite exciting for a company like us.